Let me tell you about a duplex in Los Angeles. It was nothing special really, a little worn down, needed some paint, and the plumbing was questionable at best. The seller wanted what felt like a fortune back then. I ran the numbers, again and again. Cash flow was thin, down payment was huge, every rational part of my brain screamed, "Walk away, Graham." It felt like a massive risk, a gamble that could set me back years if it went wrong. Countless sleepless nights staring at spreadsheets, trying to find any reason to justify the purchase. It would have been easier to put that money into a simple index fund and forget it. I came incredibly close to passing on that deal. I almost let the fear of the unknown, the fear of a big commitment, and the sheer hassle convince me to play it safe. My friends thought I was crazy. They saw an old building with problems. I saw something else underneath the work. Forced appreciation, rental income, a tangible asset in a growing market. The easy path was to say no, avoid tenants, avoid toilets, avoid termites. I had the checkbook out for a different, safer investment, ready to sign my capital away to something less demanding. That single decision to push through the fear and buy that duplex ended up being one of the cornerstones of my entire financial journey. So, why do most people miss out? It's not because they aren't smart, and it's not because they don't want to be wealthy. The reason is usually a combination of three things: fear, friction, and a focus on the familiar. We are wired to avoid risk and stick to what we know. When the internet was new, people were terrified of putting their credit card information online. Now we buy groceries with a click. Now we buy cars with a click. The early investors in companies like Amazon were seen as crazy gamblers, but they were rewarded for seeing past the initial fear and uncertainty. Bitcoin, Tesla, and countless other opportunities. The second barrier is friction. Buying a rental property, for example, requires a massive down payment, credit checks, finding a loan, dealing with agents, inspections, and endless paperwork. It's a high-friction process. Investing in a private startup used to be reserved for accredited investors with millions in the bank and a network of powerful connections. The system was designed to keep the average person out. When an investment is hard to access, most people simply give up and park their money in a savings account or a basic S&P 500 index fund, which is fine, but it's not how life-changing wealth is built. For decades, the single greatest wealth-building asset class has been largely off-limits to the average American. It's not stocks, bonds, gold. It's direct ownership of institutional-grade commercial real estate. Shiny office towers, massive apartment complexes, sprawling shopping centers, gigantic logistics warehouses. These are the cash printing machines that have built the fortunes of billionaires and massive private equity firms like Blackstone. They love these assets because stable cash flow from rents, long-term appreciation, less volatile than the stock market. The problem? The barrier to entry was and still is a skyscraper in itself. To buy even a small piece of a commercial building, you traditionally needed millions, if not tens of millions. You needed to be an accredited investor, a fancy term from the SEC that basically means you're already rich. This created a two-tiered system. The wealthy got to invest in the best, most stable, income-producing assets, while everyone else was told to put their money in a 401k and hope for the best. It's one of the biggest, most frustrating secrets of the financial world. The rich don't get richer by picking stocks. The investment I am talking about is tokenized real estate. It's the single biggest disruption to the property market in our lifetime, and it's happening right now. Let me break it down in the simplest terms possible. Imagine a $10 million apartment building. In the old world, one wealthy investor would have to buy the entire thing, or a private equity fund would buy the whole building. In the new world of tokenization, that building's ownership can be digitally divided into 100,000 tokens, each token worth $100. These tokens are recorded on a secure digital ledger, like a blockchain, proving your ownership. Suddenly, you don't need millions to own a piece of a prime commercial property. You can start with as little as a few $100s. Think of it this way, you are becoming a digital landlord. For every token you own, you are entitled to your proportional share of the rental income the building generates. The property management company collects the rent from the tenants. They pay the expenses. Then they distribute the profits directly to the token holders. You get all the benefits of real estate ownership, monthly cash flow, potential appreciation in property value, without any of the traditional headaches. No calls about leaky faucets, no chasing down late rent payments, no dealing with complicated financing. It's the ultimate passive income machine. This isn't some far-off futuristic concept. For a beginner, the world of investing can feel, incredibly intimidating. The stock market is volatile, and traditional real estate seems impossibly expensive. This is where tokenized real estate shines as the perfect entry point. The number one benefit is the low barrier to entry. As I mentioned, you don't need a 20% down payment on a $500,000 property. You can literally get started with $100 or $500. This allows you to dip your toes in the water, learn the process, and see how it works without putting your life savings on the line. It removes the fear factor that paralyzes so many would-be investors. The second major benefit for beginners is true passive income. When you buy your first rental property the old-fashioned way, it's often more of a second job than a passive investment. You're the one responsible for everything. With tokenization, the entire management process is handled for you by professionals. A dedicated property management company takes care of finding tenants, maintenance, and all administrative tasks. Your only job is to do the initial research, choose a property you believe in, purchase your tokens, and then watch as your share of the rental income gets deposited into your account. It's as easy as buying a stock, but with the stability of a hard asset. Furthermore, tokenization offers instant diversification, a key principle of smart investing that is often difficult for beginners to achieve. Instead of putting all your money into one single-family home in one city, you can take that same amount of capital and spread it across multiple properties in different markets. You could own a piece of a student housing complex in a college town, a fraction of a retail strip mall in a growing suburb, and a slice of a medical office building in a major city. Now, if you're an experienced investor, you might be thinking, this sounds great for beginners, but what's in it for me? The answer is, a lot. The primary advantage for seasoned investors is liquidity. Traditional real estate is notoriously illiquid. If you own a commercial building and need to access capital, you have to go through the long and expensive process of selling the entire property, which can take months or even years. With tokenization, you have the potential for a secondary market. You can sell your tokens to other investors on a trading platform, similar to selling a stock, potentially converting your asset to cash in days or weeks instead of months or years. This is a game changer for capital management. Another powerful strategy for advanced investors is exploiting market inefficiencies. It's a new, emerging market, not yet perfectly efficient like public stocks. An astute investor can find undervalued assets in niche property types or specific geographic locations. Apply your knowledge of real estate cycles, demographic shifts, or industry trends, like demand for cold storage or data centers, to buy tokens in assets poised for outsized growth. You're no longer limited by location. Hunt deals across the entire country from your desk. Tokenization also enables sophisticated portfolio construction and tax optimization. Allocate capital precisely to asset types, multifamily industrial retail. This isn't just a cool idea. It's a massive technological and financial shift being driven by powerful, irreversible forces. The first is the global search for yield. With interest rates remaining relatively low over the long term, large institutional funds and everyday investors are starving for investments that produce consistent, meaningful cash flow. Traditional savings accounts, government bonds, real estate, particularly the income-generating commercial sector, offers the stable, attractive yields they are desperately seeking. Tokenization is simply the technological pipeline that connects this massive demand for yield with the supply of high-quality property. The second force is the advancement and acceptance of blockchain technology. What was once seen as a niche for tech enthusiasts is now being adopted by the largest financial firms in the world, J.P. Morgan, Goldman Sachs. They are investing billions to build infrastructure on the blockchain because it offers unparalleled security, transparency, efficiency. This tokenization of everything is not a matter of if, but when. Real estate, being the world's largest asset class, is the most logical and valuable candidate for this transformation. The technology has finally matured to the point where it is ready for prime time. Third, there's a powerful demographic push from a new generation of investors. Millennials, Gen Z. They are digital natives who are comfortable managing their entire financial lives on their smartphones. They demand low-friction, transparent, accessible investment options. They don't want to deal with the paper-shuffling, fax machine-era processes of traditional real estate. Alright, so you're convinced. You see the potential. You're ready to become a digital landlord. The good news is, getting started is incredibly simple and much easier than you think. The entire process can be done from your computer in less than 30 minutes. Here's the exact, step-by-step playbook. First, you need to identify and choose a reputable tokenization platform. There are several emerging in this space, so do your homework. Look for platforms that are transparent. Once you've selected a platform, the second step is to create an account. This is similar to signing up for any other financial service like Robinhood. After your account is set up, you'll connect your bank account via a secure portal. Step 3 is the fun part, browsing the marketplace and doing your due diligence. The platform will have a gallery of available properties. Don't just pick the one with the prettiest picture. Dive into the documents. Finally, the fourth and most important step is to execute the investment. Once you've chosen your property, you simply enter the amount you want to invest and click buy. I want to end with this. Every great investment opportunity has a window, a period of time where the risk-to-reward ratio is skewed heavily in favor of the early adopters. We saw it with the internet in the late 90s. We saw it with a small duplex in Los Angeles. We are seeing it right now with tokenized real estate. This window is open today, 2025. The market is new. The technology is proven but not yet mainstream. Competition is low. This is the sweet spot. Fortunes are made not by reckless gambling but by calculated action on a clear, emerging trend. Waiting on the sidelines is the most expensive decision you can make. The gate is open. It won't stay open forever. Don't wait for next year. Don't wait for next month. Do it right now.